Welcome to We Are Satoshi, Bitcoin Hot Drop Channel, the first AI Bitcoin flash update provider, not a mainstream media, no BS, no gimmicks, just facts and fun. We are Satoshi. Welcome back, legend. Great to see you in Satoshi land. Here's your BTC daily update. Scroll number 63 with the planned side scroll and a thorough wrap-up answering is this bull cycle over or not at the end. Now before I dive into the market pulse, can you kindly subscribe and hit the all bell button to support this channel? Thank you very much. Market pulse. Scroll. Bitcoin is hovering around $106,935 at time of writing, drifting in low volatility chop after recent shocks. The market tone is cautious. Sellers still active, but accumulation signs continue beneath the surface. Support zones: $105,500, $103,800, $101,900. Resistance zones: $108,800, $110,500, $113,000. Sentiment: fearful but narrowing. Volatility has cleaned out leverage and left a leaner market. Crystal ball. Today's outlook. Short term. Bullish case. Stabilize above $108,800. Slow reclaim toward $110, $113K. Bearish case. Drop below $103,800. Deeper test of $101.99K. Likely close range: $105,900 to $108,600. Agora tweets: at A Pompiliano, market health isn't measured by price today, it's measured by who's left holding tomorrow. At Leah Heilpern, capitulation is messy, rebounds are patient. At Whiz, tech grows in the background, price reacts to emotion. At BTC Archive, on-chain flows show renewed cold wallet accumulation in recent days. Joke scroll number 63. Why did the hodler bring a blanket to the market? Because they heard it was going to be a cold storage night. Fun fact scroll number 63. Markets that look boring for months often precede multi-year advances. Quiet builds strong foundations. Wisdom scroll number 63. Price is the noise, conviction is the signal. Bitcoin history scroll number 63. After each major drawdown in Bitcoin's history, the path back to new highs has been paved by patient accumulation, not by panic buying at the top. Inspirational thought from Satoshi. Lost coins only make everyone else's coins worth slightly more. Patience and scarcity, baked into the protocol. Deep dive scroll. Topic: the psychology of fear. Why markets crash harder than they should. Markets don't crash purely from fundamentals. They crash from psychology, leverage, herd panic, narrative collapse, and liquidity gaps. Fear compounds because leverage multiplies moves. Small price moves force liquidations cascade. Social contagion. Negative headlines amplify selling pressure. Information asymmetry. Retail sees price. Smart players see flow and act quietly. Feedback loops. Selling begets more selling. Stop losses. Margin calls. Exchange liquidity drops. Result: crashes overshoot fair value frequently. That overshoot is what creates the best buying opportunities for patient holders. Side scroll. The psychology of fear. How markets crash harder than they should. Forced exits first. Liquidations and stock cascades create the initial violent move. Emotional selling next. Fearful retail follows, pushing price further down. Quiet accumulation then. Long-term holders and institutions step in where liquidity thins. Recovery last. Only after the human drama wanes does rational value reassert itself. Lesson: when headlines scream the loudest, that's often when rational buying quietly begins. Temple trade scroll. Not financial advice. Bias: neutral to cautious while below major resistance. Possible long entry: $106,400 to $107,200. Look for stabilization volume confirmation. Take profit. TP: $108,800, $110,500. Scale out. Stop loss SL below $104,800 on strong close. Short setup: consider only if price fails to hold $103,800 with rising volume. Is this bull cycle over or not? Thorough insight. Short answer: not necessarily, but we're in a cleansing neutral phase that could change the path either way. Here's a structured way to think about it. 1. What ends a bull cycle? A bull cycle is usually defined by a sustained, structural shift in market regime, higher highs plus higher lows on higher time frames, broad adoption drivers, strong on-chain demand, and healthy liquidity conditions. A full cycle ends when those structural supports are broken and sentiment permanently flips, rarely overnight. 2. What we've seen recently. Price action. We've seen sharp corrections and failed attempts to sustain higher levels. That's volatility, not necessarily cycle death. Liquidity clearing. Large moves have purged excessive leverage and shaken short-term participants. A typical bull market healthy reset. Accumulation signals. On-chain flows and cold wallet accumulation. What you and I have tracked point to continued long-term demand. Macro and risk. Broader macro, rates, liquidity, geopolitical shocks can accelerate or delay bull behavior even when fundamentals are intact. 3. Key indicators to watch. Confirm or deny a continuation. Watch these in the coming days, weeks. They are the best real-time clues. Higher time frame structure. Does price form a higher low and then a higher high on weekly charts? That's the strongest sign the bull remains intact. Volume and breadth. Recovery on rising volume and more exchanges regions participating equals healthier rally. Exchange reserves. Falling exchange balances plus rising cold storage equals accumulation and reduced selling pressure. Funding rates and open interest. Neutral to positive funding with rising open interest during bullish moves indicates healthy, sustained demand, not purely short squeezes. On-chain metrics. Active addresses, long-term holder accumulation, and low spend of older coins all support a continuation thesis. Macro backdrop, improving liquidity conditions, easing macro risk, or investor risk appetite rising would favor bulls. 4. 2 realistic scenarios. A. Bull continuation. Probable if several indicators align. Price stabilizes above key support, forms higher timeframe higher low, exchange reserves continue to fall, and spot demand returns. Result. Slow melt up into the next leg higher. B. Extended consolidation bearish retest. Probable if risk indicators worsen. Price fails to hold supports. Funding becomes deeply negative positive in a way that favors shorts. And macro risk spikes deeper retest of lower supports and longer accumulation period. 5. Practical view. Where I land. Given current dynamics, large deleveraging events, but persistent cold wallet accumulation and steady macro background, it's too early to declare the bull cycle over. What we're likely seeing is a corrective cleansing phase inside a longer multi-year cycle. The difference between a temporary correction and a cycle-ending bear is confirmation. New structural lower highs and long-term holders selling into rallies. 6. What you can do. Practical signals to act on. Use smaller position sizing and scale in if you are building a long-term core. Watch for the higher timeframe higher low confirmation. Weekly close back above key pivot. Prefer accumulation on weakness with defined risk. SLs. Rather than chasing rallies, track exchange balances and funding rates daily. They are early warning lights. Final thought. Bull cycles are processes, not single events. Corrections like this feel terminal, that's their job, but history shows Bitcoin's rebounds are structural, not accidental. If conviction remains and accumulation continues, the cycle steers back toward expansion. If conviction breaks and selling begets selling on structural time frames, we reevaluate. And that is all for today's episode, legend. If you enjoyed this content, please subscribe and hit the all bell button to support this channel. See you in the next one.